Hello everyone, welcome to XM Live here in the beginner's room. This session is about live swing trading. We will open trades, we will manage them. I will show you how I calculate the trades. I will show you my trading strategy, how I decide to go long or short in a certain product. And of course, we hope to make money and to have fun together. I would like also to welcome all the viewers who are watching us from YouTube and Facebook. And with no further ado, let's directly jump into this session. In the beginning, I will explain shortly my trading strategy. This will take about 5 to 10 minutes. And then we will start. I will explain the situation. Of course, I will explain what happened yesterday because, look, this is the S&P 500 yesterday. I just want to show you a screenshot. Look at this. The stock market tumbled, except of the health industry. Everything is red. And of course, the question will be also, will this continue? And what did we forecast already? Okay, so let's start. And William, welcome here in the chat. By the way, those viewers who are watching us from social media, you have the possibility to open a membership account at XM. You will get so much for free, so much information. You have 3 different channels, 8 hours. We are streaming and trading live. Doesn't cost you anything, so feel free to open an account. I think you will have a link in the description. Okay, my trading strategy. So my trading strategy is built on 4 modules, you could say. In the first module of my trading strategy, I define how do I analyze the market. In the second module, how do I manage risks. In the third module, how do I manage trades? And in the fourth module, how do I manage all my positions together? Okay, this is my trade. This is the modules. Now, in the first module, how do I analyze the market? I look first on the fundamental picture, and look, if you understand the fundamental picture, you would have been ready of what happened yesterday, because the signs were all over the place, and we talked about this for I think for the last 2 weeks. I said I expect in the S&P 500 a correction will happen. So, but exactly, I will give an overview about the fundamental picture in a couple of minutes. Then, so I look at the big picture. I'm not trading based on the big picture. Please be clear. I'm not a fundamental trader, but I look at the big picture because this gives me a roadmap what could happen. Now, my main signal I get from the COT report. The COT report is a report that is published by the US government every Friday evening, and it shows me where institutionals position themselves. So I can see institutional money is either going long or going short. I can see what do retail traders, what do the small traders do. Now, especially if the retail traders do something totally different than the institutional, this becomes very interesting. And by the way, we had this situation now already in the S&P 500 for the last 3 weeks. So I was expecting in the S&P 500 to get this correction. Now, after I have the COT report, I'm still not trading, but I know if I trade, in which direction I'm gonna trade, okay? So I know S&P 500, I will only gonna short. Why? Because the COT report and the big pictures tell me. Now, as long as the S&P 500 continues to go up, I'm not trading. But as soon as it starts to go down, I will trade, okay? When do I enter? I enter in the end based on technical analysis. So the technical analysis, just a second. Okay, I see we have questions. No deposit bonus. So look, for those in the social media, it depends where you live in the world. You can open an account. Again, you don't have to deposit directly money. You will be contacted by a representative of XM. I'm not I'm trader. Okay, so I don't know how the things go with the bonus, but call support, they will help you. Okay. So I will continue with the trade identification. The entry eventually happens on technical analysis. Now, look at this point. This is very important. The technical analysis is not telling me if I go long or short. The technical analysis is just for timing, to go in at the right moment. And then I open the, I find my entry. Risk management. I will risking between 0.5 and 2%. Okay, that's the risk that I'm going to take. And I will calculate the risks. And after I calculated the risk between 0.5 and 2%, and there are sometimes there are reasons when I risk 0.5 and the reasons when I risk 2%. Only after I did all those things, only then I open the trade. So I do not open the trade just because I feel so. Look, many retail traders feel it's going up or it's going down and they trade based on that. That's the wrong approach. Feelings will not lead to anything. Feelings will lead to disaster, I can tell you. But here I have a framework that helps me not trade on my feelings, and that's what I'm doing here. After I open the trade, I have to manage the trade, and also there are different strategies how to manage those trades. And again, I will show you everything in a practical manner, how to do that. You could pyramid, that means that you're building up a position. You could get a staggered entry. So let's say that you would like to enter, but you don't know if it's the right position now, so you can open half of a position now and another half position if it drops even further down in order to go from the correction into the profit. But of course, you never will risk more than what you initially planned to risk. Okay, you can trail your stop loss, you can take partial profits, all kind of this stuff. Again, I repeat, in trade identification, fundamental picture, sentimental picture, technical analysis. This is the way to go. And in the end, I'm a trend follower. So in the end, even though that I get the direction, so I know S&P 500, I will trade short, but I can't trade short when the market is going up. I need the market to make a trend reversal, and then I can open a trend trade. When I open a trend trade, I will have an entry and a stop loss. When I open a momentum trade, I will have an entry, a stop loss, and a take profit. So with a trend trade, I try to run a trend as long as possible. With a momentum trade, I will just take a small piece out of the trend, and that's it. Again, as I said, I will risk between 0.5 and 2%. Now, in the purpose of this account, I have a very small account here that I will trade. I will risk between 30 euro, sorry, my account is in euro, 30 euro to 30 euro will be, no, sorry, 15 euro, this will be 0.5%, 30 euro 1%, and 60 euro 2%. Okay, that's the amount that I will gonna risk per trade. Again, this is a very small account because many of the viewers that trade with small accounts. That's it. So let's already go out because again, I would like to give an overview of what happened yesterday after the market dropped. As you can see again, these are all the stocks in the S&P 500. You can see everything is red except here a couple of health companies. But look, for example, Tesla dropped over 8%, unbelievable. But Tesla, of course, since Trump won, went up 80%. So it went up 80%. It came yesterday down 8%. But the main question, of course, is this the beginning of a bigger correction, or is this an opportunity to go in? And I will give you here my view, how I see the things. Okay, now let me share here the Fed decision from yesterday. So look, this is from the website of the Federal Reserve, and what we are seeing here are the forecasts of the Fed. And what we see here are the forecasts from the Fed of September. So you have to understand, Fed decisions move the markets. They move the stock market, but also the currency market. Not so much the commodity markets, even though gold, of course, is like a currency and gold is moving a lot. So what happened? What happened and what created the move? Every time the Fed makes a decision, the market becomes volatile. But again, the market, and look, I want to show you the market again here. Let's go into the S&P 500 and let's just see. This is what happened yesterday. You see the market for many days was quite flat. And yesterday dropped. And again, the question is this is daily chart. Is this just the beginning and now it continues to go up, or will this go further down, right? So the decision happened yesterday, and what happened is that the Fed, now again, let's look first what was in September. In September, and I go to this chart here. This is the most important chart because in the end, look, the market expected that the Fed is cutting interest rates, and they cut interest rates. So no surprise, and the market shouldn't move. The market only moves if there is a surprise. Okay, what was the surprise? Look, when we look at the forecast where interest rate, I have to explain the dot plot here. The dot plot, each dot is a member of the Fed that decides about the interest rates. So in September, and again, this is September, this is not the new one. I will immediately show the new one. In September, the market or the Fed expected that we will have interest rates around here, and we got it here, right? Yesterday, they decided to cut interest rates, and the interest rates are here. But when we look what the Fed expected happen next year, we thought that there will be now 1, 2, 3, 4 to 5 other cuts. This was the expectation in September, and the market until yesterday priced in that the Fed will cut next year 4 times. Okay, this is the expectation. What came out? Let's check. So we go to the forecast from yesterday. I scroll down and I come to this. And look here what happened. So first, by the way, this is a huge surprise. The members yesterday, they weren't agreeing. Not everybody was here. That's very unusual. There were 4 members. They were against the cut. And then when we look what is now priced in, we see just 2 cuts, not anymore 4 cuts. So just 2 cuts for the next year. And this is a huge change. So what we see will be that interest rates will stay higher for longer, and this is not good for the stock market. It's very good for the US dollar, because when you get more yields, more returns on the US dollar, the US dollar gets stronger. While any other currency, they're cutting quite strongly. Like we had last week, we had the European Union, they cut. We had the Swiss National Bank, they cut. We had the Canadians, they cut. Australian didn't cut, but you see many central banks are cutting, and the Fed did cut as well, but they give a forecast and they will cut less next year, and this made the dollar strong and the stock market extremely weak. Now, I want to finish, and let me just here see, I have to, now suddenly I don't see the comments. Sorry about that. I have to move here windows around. Let's check what are the economic forecast of the Fed for last year. And this is quite an interesting table. So when we look, let's look now. 2024 is over. Okay, this is over. This is past. Let's look now at 2025. In September projection, they believed that in 2025 the economy will grow 2%. Now they believe it will grow 2.1%. So better than before.